What is up, good people? Jungle Inc. here. Hope you're doing well. Crypto market a little bit red today. We see Bitcoin down about 3.3%, 41,200. Ethereum 34.66, down about 2%. And of course, XRP will never miss a good pullback, will it? Down to 55 cents, about 3% down on the day. And this has everyone wondering, is this just a healthy pullback, or is there more pain in store for us? What I tell you is this: I'm not a fortune teller. What I'm particularly looking at is we work through this first quarter of the year. Do we have any distress in the banking sector, commercial real estate, or some other nonsense pop up here that we're not expecting? I expect within crypto a little bit of a lull now, but at some point people are going to start trying to front run that halvening event. Happens in April. So I don't know. What I would warn you is this: to start out this year, interest rates, we're hearing they might start pulling them back. It's still elevated. Things are a little bit shaky out there. People are a little more battered than they want to admit. And we could have a little bit of duress to start this year. A lot of people were saying we're already in only up mode. The bull run is upon us. You look across the board, maybe it's going to start. But you got Polkadot under $7, 55-cent XRP, Cardano not real high, Atom under $10. I think we have a little work here to be done before we can call a runaway bull run, at least for where we stand now. We're in a little bit of a holding pattern. I'll look for value, try to acquire over time, understanding, in the short term at least, things can get pretty ugly. Now, Brad Garlinghouse responding today to JP Morgan Jamie Dimon. Articles from You Today says, in a recent interview, Ripple CEO Brad Garlinghouse discussed the major impact of a Bitcoin ETF approval. We're going to dig into this. So many people are saying this is a nothing burger, or it's even bad, and I think it's quite the contrary. We'll dig into it a little more, but Brad thinks this is a big deal. He also addressed the concerns raised by JP Morgan CEO Jamie Dimon about the crypto industry at large. And before we really break down what Brad has to say here, what I tell you is, if you're a little bit older like me, you've been through this before. If you remember the internet, we looked at a lot of these companies and we're like, that's just digital, it's online. What's the value there? I remember when MySpace sold for like 400 or 500 million. I'm like, are you kidding me? This is just a website out in the psychosphere. How could it be worth that kind of money? A lot of these web-based businesses are some of the most valuable in the world. It takes us a while to wrap our minds around this, that there is substance there, even if it's purely digital. If it builds value, doesn't have to be a business. If it builds value in the world, even if it's digital, it's going to have some serious real-world impact there. Brad went on to argue that while new technologies like crypto may attract bad actors, they also have significant benefits and should not be dismissed outright. Bad actors will always use a new tool. So again, we're not going to say, oh, we need to get rid of cell phones or email or anything else that criminals like to use. They use useful tools just for bad purposes, same as we use useful tools to conduct our business. He pointed out that Ripple only works with regulated financial institutions and does not support anonymous transactions. And I'll tell you this, there's nothing wrong with anonymous transactions. I may want privacy, doesn't mean that I'm doing some sort of crime. But of course, the government is always going to try to say you're not entitled to privacy and you shouldn't have it and we should be able to see everything. So this will be another, thing we're going to have to fight about here. A milestone for crypto, Garlinghouse stressed the significance of the SEC's recent approval of spot Bitcoin ETFs, describing it as a major validation for the cryptocurrency sector. It's a very big deal. And people a lot of times, doesn't make them rich overnight. They don't see the bigger picture and they're like, oh, that was nothing. Just wait around. You're going to see how big it actually is. And it's going to extend far beyond just Bitcoin. Next article is from ZY Crypto. It's titled XRP Ledger Pitch to 1.6 Trillion Asset Manager. Ripple's Chief Technology Officer, David Schwartz, has pitched the merits of the XRP Ledger to behemoth asset manager Franklin Templeton, even as traditional finance giant increasingly pivots towards the crypto space. And I thought that was so funny. I saw Franklin Templeton, they had the little mascot with his laser eyes there. Never thought I would see that. Franklin Templeton said other layer ones outside of Bitcoin, Ethereum, Solana have massive potential, and we are continuing to support, monitor, and develop these networks as they grow and mature. In response, David Schwartz said the following. He emphasized the capabilities of the XRP ledger. Schwartz, one of the main architects of the XRP ledger, highlighted its reliability, stability, particularly in handling millions of transactions effectively over a decade. He further emphasized XRP's strength in tokenization and the exchange of real-world assets and crypto assets. So I agree, there's a lot of value here with the XRP ledger. It is novel. It is unlike most other blockchains out there. It's not proof of work. It's not proof of stake. I think that gives you some advantages. Now, there's a lot that the XRP ledger cannot do that we see out of Ethereum, Cardano, Solana. But the things XRP does, it does well and in a way that could be scaled in a huge manner. I think XRP will have its place, and especially having that built-in tokenization feature and decentralized exchange built directly into the protocol and not on top like a DApp, I think will be a game changer as we go forward. People are stressing about this kind of stuff. Will there be an XRP ETF? Yeah, the day will come when there's an ETF for all of your major cryptos. For over a decade, XRP has been a top cryptocurrency. It has been ruled by the courts that it's a commodity. It is always one of the most traded cryptos in the world. Yes, the day will come when there's an XRP ETF. It's not going to happen tomorrow. If it did, there probably would not be sufficient demand. It doesn't matter. We will continue to build, and you will see the day when there's an XRP ETF. Now, they're not going to roll in Bozo Coin number 5,000 into an ETF, but all your major ones will see exposure to traditional finance, and they're not just going to let your current players run off with that whole swath of investment opportunity. Your big players want in, and they're going to get it. Now, the Ripple court case, it set the stage. It showed that a crypto asset like XRP is not a security, that it's a commodity. And this was the first case where someone took the SEC the distance and actually got a clear ruling. In a library, you couldn't be that clear on what the judge was saying, but this was crystal clear. Trade on the secondary market, even if it's Ripple, is perfectly fine. XRP itself is not a security. That set the stage for what I think are the two most important court cases in crypto history. And at the conclusion of Coinbase and Binance, we're going to see how current laws really stand across the litany of crypto transactions, the trading of various crypto assets, staking, all the different things that we do on exchanges. It's up for grabs. We see here, judge in SEC versus Binance case will hear arguments on whether crypto is a security. The Binance U.S. legal team will be allowed to address whether a digital asset remains a security in perpetuity, and staking is a security in court. So they're going to go over all these issues. And we're going to get two major rulings. If it's a split decision, if Binance doesn't go well and Coinbase does, then I think we will see some sort of appeal here. But if it's a sweeping and resounding victory for crypto and we get what we're expecting here, Ripple, Coinbase, Binance, I think it'll be game over. So we're watching here, seeing how those two court cases develop. And again, great attorneys on both sides. I think they will argue well, and we will get the correct ruling. And that's what's important, the correct lawful ruling like we did in the Ripple case. Most of these assets are not securities. They are purely commodities. And since these exchanges, deal with a ton of assets, well, we're going to get a ruling that's going to cover a wider net here than what we got with Ripple and XRP, even though that really set the stage for what's going on here. What about staking and all sorts of other stuff? I don't know. We're going to find out here. Last article from Cointelegraph titled Impact of Bitcoin ETF, Revolutionary Change or Colossal Dud. So again, everyone's worried. Price is going down. We got our ETF. Maybe this doesn't mean anything. After pushing for more than a decade, the cryptoverse finally got what it wanted, but be careful what you wish for. Many had predicted that this drawback would happen, and it's probably just a hiccup, but it raises questions about the after effect. Will ETFs really bring back customers who were burned during the last crypto winter? So the thinking is, well, these people got burned. They'll never invest in crypto again. We saw this with the dot-com bubble. Did people go, oh, I don't want any of these tech companies. They already burned me once. No, once that value really emerged and hit the prime time, everyone's holding tech companies in their investment portfolio. And if they're not, they're getting smoked. Like once value really emerges here and it goes mainstream, just because there was a crypto winner or a few of them isn't going to stop anyone from investing in the space. Nonsense argument. What if asset managers like BlackRock and Fidelity build their Bitcoin ETF and no one arrives? We're already seeing there's quite a bit of volume. Now, I expect that to kind of peter off a little bit as the FOMO subsides. And of course, people have rebalanced their portfolio, getting out of futures, getting out of Grayscale's product because of the high fees. But there's going to be demand there. First of all, BlackRock, Fidelity, major players, they already know. They wouldn't have jumped in here if they weren't sure. They know the demand is there, 100%. Demand will continue to rise over time, partially because of things like this that really help crypto go mainstream. And people are questioning if this was successful or not. Listen, Bitcoin just went above silver to become the second most important commodity ETF in the world today. Out of all the ETFs, only gold shows more action right now. If that's a failure, man, I don't know what to tell you. Things are going well. Further, it says, you know what? This is enhancing crypto's reputation, and I agree. Not just Bitcoin as an asset class. People are starting to understand, and I harken back to that idea of tech companies. It took us a while, but as we had more and more success, and we got comfortable with really the future, that's what this is. This is cutting edge. But once it starts becoming commonplace, people wrap their minds around it, and then it's off to the races. We're going to see the same thing here. I'll leave you with the last quote from this article. Most people are not comprehending the enormity of the barrier that has been lifted, making the ETF as easily investable commodity just like anything else. A lot of people, they want to invest with their brokerage accounts. They want to invest with their retirement accounts. They trust Charles Schwab, JP Morgan, BlackRock to hold their value. And I know all the crypto purists are totally against this, but I think it is a valuable tool in the right place. It's not always appropriate to keep big sums of money in your personal possession. You can be at risk for robberies, home invasions, losing your keys. Everyone acts like it can't happen. It happens all the time. And so a lot of people just ain't going to play this game unless they can tell BlackRock, Fidelity, Charles Schwab, you know what, you keep that secure and I'm just going to invest my money. And even if you do that, it doesn't mean that you can't use cryptocurrencies in your daily life. You can keep a usable amount, on you to use. But for investment purposes, a lot of people ain't going to play this game unless they have something like an ETF that allows them to enter this space. Again, pure crypto enthusiasts may have a different viewpoint, but it's about bringing new people and new money to this space. And I think exactly what ETFs will do long term. Let me know what you think down below. And as always, please like, please subscribe. The revolution will be televised right here on Jungle Link.